The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, thanks for joining us for this week's VIX Service live video, and thank you all who are here as a guest. I'm opening this week's video up to everyone in the room to give a preview of what I do in the VIX Service. Before we get started, if we could just do a quick sound check, that would be great. If you can hear me and if you could see my screen, you should be looking at the VIX chart. That would be great. Just type in a yes. All right, great. Thank you so much. Okay. So again, this is the VIX Service Live video, and typically in these videos are done every Monday at the close. I'll review the counts on the VXX along with the equity charts that I watch, which are the Russell 2000, NASDAQ, and the SPX. I'll also review any trade setups that we're currently in the room and or are watching. We do have quite a few new members, so after we review the charts this week and I go over what potential setups I may be seeing, I am going to spend a little bit of time kind of explaining the service a little bit for those who are guests of this video and also those who are new to the service. Just kind of going over exactly what the trade setups look like, how to use those trade setups, what the option workup looks like. And I'm also going to be going over some risk management strategies and just some potential sizing that one could use using the service, to help with the risk management. And this is something that I think could benefit everybody, those old and new to the service as well. All right, so let's get started. Let's take a look at the counts. So starting with the VXX, what I'm looking at here, this looks like a large ABC down off of the highs, off of the May highs here. So I've got A, B, and then C, ABC down. This isn't quite filled out. So this is looking like 1, 2, 3, needing another 4 and 5 of this larger C. This is what this looks like to me. It just looks like a large ABC down off of this high. And that's really what we've been seeing on volatility in the VXX really since the 2020 lows. I've just been seeing a lot of ABCs. That's really what this action has looked like. So this is tracing out a similar pattern to what I'm seeing on the equities in regards to this current move. This does look like we're bottoming in a wave 3. Probably need another 4 and a 5 down to finish off this larger C wave, which again fits with what I'm seeing on the equity charts. All the equity charts do look like we may be dealing with the same kind of situation where we need another 4th wave and a 5th wave to finish off the larger wave pattern. So that's what I'm seeing here. As far as a bottoming structure, the equities are certainly looking like we may be forming a bottom. There's really no signal of a bottom just yet on the VXX. We are in the target zone for this potential bottoming region of this wave 3/C, but we don't have any signal of a bottom just yet. We do have some divergence forming here on the smaller degree time frames, but there's no signal of a bottom just yet as we're still moving lower really into the end of the day. We're closing in the 123.6 extension of this initial move down off of the high that was struck on the 24th. But again, no signal of a bottom just yet. I would want to see a move back up over 32.47, followed by a move through 33.13 to signal that we've bottomed here in this wave 3/C, and that would potentially set up this 4th wave, again, potentially as a diagonal to get that 5th wave down. Until that occurs, though, this can still extend lower, and that's pretty typical of volatility to the downside. We often see this just continue to grind lower and lower. So it's really important that one is really careful when trading volatility. You really don't want to let long trades just kind of go into the abyss, as I call it. Anytime trading volatility to the long side, I really need to see a setup. I want to see a 5-wave move to the upside and or a break of resistance or potentially an ending diagonal setup. But I really am quite careful trading volatility, just because there's so many times when you'll see a failed setup and you can just really get stuck in a trade, especially moving to the downside as these just continue to trend lower and lower. So, but nevertheless, it's still a really great chart to keep an eye on for validation purposes of the equity charts. Oftentimes, volatility will kind of give us some cues as to what's happening in the equity charts. There's a lot of times when volatility charts are cleaner than the equity charts on the smaller time frames. So it's something I really always keep a very close eye on. It's something I'm always watching before I will enter any trade on the equity charts. Whether I'm using the volatility charts for a trade or not, I'll always watch them to see what those charts look like, to help give some guidance as to what's happening in the equity charts. So as of right now, this is continuing to grind lower. I don't see any setup on volatility. I also don't see any clear setup, high probability setup in equity charts right now either. And this is kind of confirming that we may have put in a top in that wave 3 in the SPX and the Russell and the NASDAQ, but we don't have any confirmation with the break of support of those charts, and we certainly don't have any confirmation with volatility as well. Volatility is still grinding lower, have not moved through resistance just yet. So again, no confirmation of a bottom just yet in volatility, and no confirmation of a top just yet in equities. All right, so moving over to equities, let's start with the SPX. The first thing I want to point out on this is the complexity of this chart. So overall, this is just a really, really sloppy, messy chart to the upside. Ever since we struck this low back in October, we've just had corrective and sloppy wave action. And it really hasn't even been clean corrective wave action. It's just been sloppy all the way around. So we've got, clearly corrective off the low as a wave A, clearly corrective down, clearly corrective up, clearly corrective down. And this is where things are getting, potentially we may have an impulse moving up off this low, but after we struck this low here back in early May, this is now corrective too. So it's just really, really sloppy action. So what we need to do with this is just be very careful. We need to, how I've been approaching this is just being quite nimble. I have not been looking at any real longer term setups at the moment, and all the setups we've been taking have just been shorter time frames, watching for corrective wave action and just trying to take advantage of shorter term moves. And it's been great trading. Since early March, this has been great traders market, and we've done really well with this market. So I can't complain about it. But what what we can say is that it's just really sloppy. So we just need to be careful. We need to not get stuck to any position, and we just need to be nimble and ready to move. So what I'm seeing here is a topping. We're in a topping region. Bigger picture, we're certainly in the range for this larger degree B wave. I don't think we're done to the upside though. The pattern just doesn't look quite complete yet, any way we slice it. I do think again, we are in a local topping region. If we look at our MACD, we are, we're in the region where we've seen a lot of local tops over the past several months here. We started to roll over here. So I think we're very close to, if we haven't already put a top in here, a local top. The question I'm going to have is what top this is. The primary count on the SPX would be, this is the top of wave 3 of a wave 5 here. So we have a 3, another 4th, and a 5th to get that ending diagonal off of the lows that were struck in early May. And then from there, that would put in the larger degree top potential of this B wave. The other count I'm watching, which may fit a little bit better on the NASDAQ, would be that this may be just a larger wave 3, where we see a larger 4th wave down towards around 4,000-ish before getting one more higher high for this wave 5. Would see a larger peak. So those are really the two paths I'm watching right now on the SPX. And to be honest with that, I'm not leaning heavily one way or the other, and I'm just keeping an open mind. I'm going to really just kind of watch for the smaller degree setups to see what plays out. So that's what I'm watching on the bigger picture SPX. Zooming in a bit, we're still over the support zone here, which I noted in the update, and that comes in right at that 42.63 to 42.55. I'd want to see the zone broken to give us the initial signal to top in this wave 3, and from there, the support for that wave 4 is going to come in around 42.32, potentially down to 41.96. So that'd be the support zone for this wave 4. We can hold that zone, then we can get that one more higher high for that wave 5 up. So that's what I'm watching on the SPX. If we start to break down below that zone, 41.96, at that point, I think we've either put in that larger degree top in all of wave B, or potentially that larger third wave of the larger diagonal. So that's what I'm looking at there. If we do get the higher high, whether it's this diagonal here or the larger diagonal, what I do want to note is that this potentially is an ending diagonal. While ending diagonals are very difficult to trade inside of, they are one of my favorite trades to trade the reversal of. And the reason for that is that ending diagonals are really the only pattern in Elliott wave that give you a very clear price target as well as a clear time target. So this works really well for options. It lets you really dial in your option timing. And these are types of trades that, almost always will return back to the origination point of the diagonal. That's the price target. And they almost always do so in less time than it took that diagonal to complete. So let's, using this as an example, if we fill this out 1, 2, 3, 4, and 5, so our price target would be the origination point, which would be 4103, assuming we get this 4th and 5th, and our time target would be however much time it took for this diagonal to complete. So May 24th to, let's assume it went out to June 8th. So we'd be that time frame, 24th to June 8th, 2-3 weeks. That would be our time target would be less than 2 weeks. So we can really dial in our options trades at that point as using this as our target, 4104, and we can use strikes that go out 2 weeks, 100% of time of that diagonal. So I love trading diagonals or the reversal of that diagonals. They're my favorite trade using options. So I'm always on the lookout for those. So if we get a diagonal, I'll be all over a trade to the downside on that. Again, either this smaller degree diagonal or this larger degree diagonal here for this purple count. So either way, I'll be all over that trade if we get it. Okay. All right. So moving over to the NASDAQ. Also looking at a larger diagonal, and this is what I was saying. This looks like a larger diagonal to me, where this wave 3 is topping here, and potentially getting a larger wave 4 down to 13,500-ish. It's just kind of what looks best to me. Again, it's very sloppy action up off the lows here, but that's just kind of how this counts best to me. But I need to see under 14,418 to 14,248 to really give me a signal that we've topped. Okay, till that happens, we can still grind higher. We still may fill this out in another sloppy action, but that's really what looks best to me. Getting a 4th wave down and another 5th up to fill out the larger diagonal. But again, I'm keeping an open mind, and I'm certainly not tied to any one particular count at this point because, again, it's just really sloppy action. As far as the Russell is concerned, again, sloppy action since the lows were struck back in March here, and going back even further. This looks like it may be tracing out a triangle, but it's just really, really sloppy. So let me pull the larger time frame chart on the Russell up here. But Russell. So this looks like it may be trying to fill out a triangle here for this B wave. How we get up to that C wave is a little bit unclear. It looks like we may be tracing out a diagonal in here for this particular end of the C. So, this may be A, B, and then A, B, C, and then a larger A, and then another B, and then a C up. It's just really sloppy right now. I don't have a really high confidence count at the moment, bigger picture, but that's kind of what I'm watching. If we fill this diagonal out, however, I'd have 1, 2, 3, 4, 5 for wave C. I would be all over a trade to the downside for origination point of 1709. So I'll be looking out for this to fill out a diagonal to finish off this potential move here, giving us a reversal trade. That's that's what I'm watching over the next couple of weeks here for a diagonal trade. But again, we've got some work to do before we can really see that fulfill. So we'll see what happens on that over the next couple of weeks if that diagonal fills out. But as of right now, I'm just kind of waiting to see how that plays out. All right, so that's kind of what I'm seeing on the equity charts and volatility charts at the moment. As far as any trade setups, I don't have anything that I'm watching in the next day or two. I want to see if we can break support on the SPX, which is here. If we can break support on the SPX, because we don't have a 5-wave setup, we don't have an 8-wave 5-wave setup to the downside, we don't have a break of support, and we're in a diagonal. So again, I'm always very cautious when we're trading in diagonals. There's really no 5 down. It's pretty clearly 3 down. We don't have a break of support, and we just have really nothing to go off of. We don't have any targets. We don't have any clear setup at the moment. and we don't have any signal on the top. So while I'm leaning towards this having already topped in the wave 3, it's just not high probability enough to take a trade. And that's really what I'm going for, is really taking high probability trades, minimizing losses, and increasing wins in the service. So until I see that, I just don't have anything right now. In the next day or two, that may change. We may see this break of support. We may see a very corrective retrace, which gives us some confidence that, hey, this is a corrective retrace. We're bouncing right off resistance. And we can trade this C wave down for this wave 4. That may very well occur. May not, but we'll just have to see how that plays out over the next couple of days. Again, right now, I just don't see a high probability setup. The last setup that I saw that was high probability that we took was in the SPX. It was here, and we took this trade right here. So this was a pretty clear 5-wave move off the lows here to me. 1, 2, 3, 4, 5. And the trade that we took this trade here, 5 up, 3 down, and we traded this move up here into, I think we just traded it right around 42.20, and we used the SPY for that. Let me see that. I'm just going to show that. Yeah, so this was the trade. So this is our trade here. So we saw it was this setup here off of the 531 low. We had 1, 2, 3, 4, 5 expanded B wave, and then a corrected move A, B, C, and I think we got in here, and this was overnight action, moved back down to the 76.4 retracement, and then we shot higher on Thursday. It was, and this is the trade that we took, and we had a target of 423 was the target. And I think we came up just about, we came about 5 cents short of that target by the end of the day. So that was a trade we took last week. That was less high probability setup. Again, 5 up and then 3 down, and then we entered here right around we entered here right at the close. And then some of the other members got in here as we corrected lower. But that was the last trade we took. And again, it was a clean EW setup. 1, 2, 3, 4, 5. Took the trade, and we had a nice trade again up to 423. Again, right now I don't see anything that resembles that or an ending diagonal setup, so we're just going to be sitting tight and see what happens over the next few days to see if we get a setup. All right. So let me go over what I want to do now. Is I want to go over how the setups work in the service, how those are posted, and how to take action on those, and then I'm going to go over risk management and sizing, which isn't something I really talked too much about in the past. So this should be new information to really everybody in the room. All right, so when I post a setup, this is what it looks like. So these are the setups in the room. Let's do the last one, SPY. So this is the last setup, and they get posted as index sector setups. They can be set up as alerts, email alerts, or SMS alerts, or both. And I'll post a chart of the actual underlying. I'm going to use the underlying. I'm going to use the SPX for tracking the trade, for identifying the setup, but then I'll use the actual ETF to define our targets. So in this case, this is what I saw. I saw 1, 2, 3, 4, 5, and then I saw a move down into the end of the day. Was using the 61.8 retracement as our retrace target, and we had a 422.92. That was the target. 422.92 was the target. I think we hit that, and that was what I was looking for. I was looking for that move to happen the next day. Okay, and so when I post the setups, that's the actual setup on the chart. That's the EW setup, and then I'll post this workup. So this workup is something that I developed over the years. And it's an Elliott wave based option workup. So what I'm doing here in this is I'm using an ideal wave 3 target, okay, and I'm using a minimum target for a C wave. And this is not the best example because we didn't hit that, but let me use a different one because I want to show actually how this works with that. Okay. let's use this one. Okay, so this is better. Okay, so this was SPY puts. So this was right before that last SPY. So this was a put setup. So here we had 5 down, 1, 2, 3, 4, 5, and we had a very clearly corrective up. And I really was looking on this particular trade. I was really looking more at this corrective wave action than I was this action to the downside. This was really clearly corrective. We held resistance right where we needed to hold. Had another 5, another really sharp move down, which could be counted as 5 down, right into our pivot at 61.8, 76.4. And this was a really, really nice reversal off of a corrective wave action. This is what I really liked about this particular trade. So 1, 2, 3, 4, 5, corrective up, and then another sharp move down for a 1, 2, 1, 2 potential. Okay. So when I posted this trade, what I'm looking at on the option workup is I have 2 targets here. Our wave 3 target, in this case it was 414.27. Our minimum target for wave C was at 414.90. Whenever we're using Elliott wave, we always have a minimum target, which is the wave C, and that's typically the 100 extension of the initial move down. And our wave 3 is going to be somewhere between 138.2 to 200 extension of the that initial move down. Okay, so 414.27 and 415.90. So going back to our chart, so 415. 414.27 was the 161.8, and 415.90 was the 123.6. Use that because we already had this 1-2 down. We had this 1-2, 1-2, which already went to the 76.4. So at this point, if we're going to move lower, we're likely going to break through that 100 extension, hit at least the 123.6. So that was the minimum target. Okay. So what I like to do is I always want to try to get 100% off the minimum target. And the minimum target is if the setup follows through, the minimum target is a very high probability target. Okay, so when I set these trades up, they're going to either be 100% loss or they're going to be 100% or more gain. So that's the goal of these trades. So the minimum target's important because I want to have a very high probability minimum target. And when you have an EW setup, when that setup triggers, when it confirms, that minimum target is almost always hit, very high probability target. 80, 90% of the time, it's going to be hit if you trigger the setup, okay? So if the setup triggers, you're going to hit that minimum target 80, 90% of the time. And I want to get at least 100%, okay? Especially in this market, I want to be able to get 100% at the minimum target. And once I hit the minimum target, I'm very, very nimble. I'm very cautious, and I'm quick to take profits. If we just see a complete blowout of that first target, and we don't, we're not moving towards the end of the day. It's still early in the day. The trend is, is moving in our direction. We blow right through it. In a 5-wave move, okay, we can hang on to it, and we can see if we can get a little bit further down to the wave 3 target. In this case, that wave 3 target would have been at the 161.8. At 414, we can hang on a bit more. If we start to see some, stalling out towards that minimum target area, if we're starting to get some support there, if we're moving towards the end of the day, if there's any sort of kind of risk at all, it's better to just cut and run, take the 100%, and call it a day. That's kind of what I found going over my past trade history is that, that minimum target, that 100% has a very, very, very high hit rate. When things start to get less, that the hit rate starts to go down is when we're trying for that ultimate target. That's when things go down. So if we can take 100%, 150% on a very high probability level over the long term, that's going to be allow you to grow your account very, significantly, while being able to just get in and out of trades quickly. Now, there's times, like I mentioned, when we have an ending diagonal, I'm going to be a lot more. I'm going to be a lot more. I have a lot more confidence to hold on to the trade, because when an ending diagonal triggers, and you typically know it because the reversal is very sharp, it's 90% plus probability that you're going to hit the origination point in less time than it took to get there. So I have a lot more confidence holding an ending diagonal target than I do at just a standard 5-wave move, because a standard 5-wave move, maybe it's 50-50 that you get to the 100% extension and stall out there, or the minimum target and stall out there, whereas an ending diagonal, it's like I said, it's 90+% that once that ending diagonal triggers, you're most likely going to hit the origination point in the time that in the time target as well. So they're very high probability. So I'm a lot more comfortable holding ending diagonal setups all the way to the ultimate target than I am a standard 5-wave move or just a standard 8-wave move where you've got impulsive down and corrective up. Because again, these types of moves, again, maybe it's 50-50, especially in this market, folks, especially in this market. The minimum target hits, and 50% of the time it reverses, and 50% of the time it slices right through. So with those odds, it's usually better to just take your profits and run. Okay. So this particular trade, so this was May 22nd, near the close, and then May 23rd, near the close, we got up to 100%. And we actually, did we go through? Yeah, this one actually went all the way. This one, so we hit the minimum target right there, and we can see in this particular case, the minimum target was 415.97. We bounced up off that 123.6. We hit the 100 extension and then moved lower again. But again, nothing wrong with taking targets at the minimum target there, because this easily could have just continued to move higher again and bounce off there. But this one, we managed to hold resistance there, and we ended up hitting the ultimate target down by the end of the day. So if there were anybody who held on, this one worked out quite well. But again, either way, minimum target here, you're at over 100%, and then by the end of the day, we hit the ultimate target, for the full trade, which was 270, 300% by the end of the day. So this was a really nice setup again to the short side. And then we flipped that a few days later, and we went long SPY off that 5-wave move off the low. So, and this one's same thing. This one worked out really well. It moved up after we hit that one. We moved up, sharply off the morning lows, and we moved up all the way. We hit the ultimate target at 42.90 by the end of the day. And there was a lot of folks who actually re-entered here at a lot better price and had really excellent returns. But either way, this all worked out well as well. Okay, any questions on the workups? How those work? Okay, so let's talk about risk management now and sizing. So as I noted, these setups are all set up to where whatever you pay in premium, that's your total risk, okay? So give me 1 second. Yeah, and I'm going over that right now. I just got a question about invalidation. So these are all set up where the premium you pay is the total risk on the trade, okay? So let's go back to this one. So this particular case, we had the 418s was the optimized strike. This was the one that had a 100% target at the minimum target and 269% at the ultimate wave 3 target. And on this trade, so these are the strikes, 418, and the strike price is $1. Okay, so whatever you pay for the premium, that's it. That's your total risk. So you either can lose all of the premium paid. So if let's say you buy one option, you're going to be paying $101. Okay, so either you lose $101 or you make 101 plus, or you make 110, or you make $269. Okay, so those are your trade parameters. So you lose $1, you make $1, or you make 270. Okay, depending on if you take the minimum target or you take the wave 3 target. Okay, so those are the parameters. Okay, there's really no invalidation. So although the setup is going to invalidate with a break under, or in this case over this this 421 level, because that's the invalidation level. When we're using these shorter term options, there's by the time you get up to that point, most of the time the premium is so low, it's not typically worth, closing the trade out and taking the 10 cents or whatever it may be left. And there's been a lot of times when we've gone down to 10, 5 cents, and they've come all the way back. Again, especially in this market, folks. So I just will let if the option, if the setup doesn't work out, I just let it expire, go to zero, and there's really no management of stops. You don't have to worry about it. Whatever you pay for the premium, that's it. So you either lose that premium or you make a profit on that premium, and that's typically how I manage these trades. It works well for me because I've got a lot of stuff going on with other markets, managing other things. I'm covering two different rooms, covering lots of different markets, and I have a lot of responsibilities in the room. So I just don't have a lot of time to manage trades. So this system works well for me. It may also work well for you if you're not a full-time trader, to where you can just um, you know um, set the trade and forget it. And if it works out, great. If it doesn't, you don't have to worry about a stop, and you just lose the premium. Okay. So that kind of leads us into the next question. Well, how much do you buy? And this is really a personal question. It's really what your risk management, what you're trying to achieve, how much capital you have, and how much capital you're willing to risk, how big of that account is, how big this trading account is compared to your overall ability to replace that value. There's a lot of factors that go into it. Okay. How much you're willing to risk. But let's just, I want to always look at this. I like to look at things from the loss perspective before the gain perspective, how much we can lose rather than gain whenever kind of dealing with risk management. So I just want to look at, the math of gain versus losses. Okay. So let's say you have an account value. We'll just use a starting balance of $1,000. Okay. If you lose 5%, it's going to take you about a little over 5% to gain that money you lost back. Okay. And as you increasingly go higher and higher, the more you lose, the greater the percentage is going to take to recover those losses. Okay. So if you risk 10%, it's going to take you 11% to get that 10% back. If you lose 15%, it's going to take you 17% to get it back, 20, 25. And as you go down lower and lower, that number gets increasingly larger. So at 50%, you need 100% gain. And the more and more you go, it just takes more and more money to get that back. And it's not a linear recovery. It's an exponential change here. So you want to limit your losses. Okay. So a conservative amount to risk of an account, would be somewhere 2.5% to 5%. It's a conservative amount to risk, per trade on any one option setup. Okay. This is, it's fairly conservative given the, where the returns are, given the 100% return minimum on a 100% loss and a very high probability trades. And the more that, and there's different calculations you can use. You can use Kelly criterion to really kind of fine tune those numbers, but and depending on what your win rate is and what your expected win is on average, you can really fine tune those numbers. So I want to just kind of show a kind of real world example where we've been in the room since March, and this is really when I kind of refined the system and really got more conservative about taking profits. And so far since March, we're 9 wins and with 12 total trades. I'm not counting these 2 trades here, this one here and this one here, for this calculation, because these were kind of bonus trades, what I consider higher probability, lower probability trades. If we included them, the numbers would be about the same. So because we had 1 loss and 1 gain, it would actually be a little bit better because this trade here was a really good trade. But I'm not counting them for this purpose here because they were what I posted as bonus trades, so I'm not counting them. So taking those out, we would be 7 for 10, so 70% versus 75%. And these are the actual trades in the room and kind of what we gained. We started March out with 5 trades. We had 1 loss and 4 winners. These trades were all out. They all exited about 150%, which you can see here, and the losers 100%. This trade was an ending diagonal trade, so it gained over 300%. This one gained just 100%. This one gained just 100%. This one lost 100%. This one gained. This was a good trade. That was the short trade I showed you. and I'm just putting it at 150%, which is where we're at the minimum target. When we hit that minimum target. So again, I'm trying to be conservative on these exits, but just using, kind of real world trades at 5%, just risking 5% per trade, starting at $10,000, we'd be, a hypothetical account would be over 16,500 right now, using 5% of account value. And you can see how quickly this grows, as we continue to move higher. 8% gain, 16%, had a loss here down to 10%, 18 again, 27, 46. So again, we can see that, exponentially this grows quite quickly when we have a high win rate. And that's really the goal of this, take the profits, let the win rate kind of, get the exponential gains on the trades. Okay, that's the goal. 2.5%, you're up about 32% in the same, actual real world trades. So from 10,000 to about 13,000. So let's just assume that we started had 3 losers in a row, to start this out, and then we went into the same thing. So at 5%, you're down 14%, before you start making your money back. So it's a fairly decent drawdown at 5%. And the more that, the larger this number is, the larger that drawdown number is going to be. And there's going to be times when we're going to have a string of losers, 3, 4, 5 losers in a row. So you have to be able to withstand that. And you can see at 5%, you're at a 14% loss before you really even, before you, start making some money back here. And it really doesn't get back until, 7 trades in before you're really starting to grow again. At 2.5%, it's not nearly as big of a loss. 3, 5, 7, and then you're back at 4, and you're at 17% again. So, and that's just kind of an example of if you started the string out with a series of losers. So you need to be able to sustain a series of losers. It's going to happen. It's just kind of the name of the game. There's going to be a time when you hit 2, 3, 4 losers in a row, even if you're hitting a very high percentage of overall win rate, and you need to be able to sustain that. So you don't want to risk too much of your account. You want to be comfortable taking the next trade. If your account's getting hit too hard, you're not going to be comfortable taking the next trade. You may be risking a different amount, and it's important to be consistent with your risk amount, because that's how you continue to grow the account over the long period of time. But again, the lower this number, the less your drawdown is going to be. And again, a 32% return over a period of 3 months is excellent. You really can't ask for a whole lot more than that, and that's only at 2.5%. If you lower those numbers, you want to be more conservative. If you have a bigger account, or you want to be, you want to lower, you want to take less risk, lower that to 1%. You're at, that's not an active sell, but lower that to 1%, and that number is, it's still going to be a good return, and you're going to be risking 1% per trade, 1.5%. It really just kind of depends on what your goals are. If you want to be a really high risk, and you have the ability to replace capital, quickly, you can risk more. But again, you never should be risking so much to the point where you're potentially blowing up your account on any 1, 2, 3, 4, or 5 trades. That should never happen. There's just no need for that. Because again, high probability trades, over the long term, the account's going to grow, quite significantly, risking a fairly low amount of money. Okay. Questions. Seeing quite a few pop in, so let's go over those. All right. All right. So VIX is rather muted, and that's Q drop. I don't have ideal targets with the VIX. You just have to, I show them on the chart. We just have to kind of see how things play out. How easy to follow trades not using options, but easy. They can be, they're all the setups are Elliott wave based, so there's always an invalidation level and a target level. So they certainly can be followed using, not using options. It's certainly doable. And just take profits when we take profits, on the options. It's certainly doable. Yeah, it certainly is. They're all EW setups, so there's nothing that would make that not possible. What is the typical expiration date? They go anywhere from, I like to go at least 3 days out, but it just depends on the setup. Sometimes I'll see something that's high probability and I'll use the next day option. Very, well, I won't say never, but none of these have been same day options. I I don't see me posting a same day expiration in the service. I won't say it'll never happen, but I don't think it's going to be likely. So it'll be at least next day, and I like to try to at least get to 3 days at minimum, and it just depends on the setup. But there'll be some that are longer term. When I posted a longer term silver setup, and that's was kind of a bonus trade, but it just depends on the setup. And as the market changes, that'll change too. Right now, I'm trying to be more nimble, being shorter time frame trades, but that'll trade as the market changes. As the market starts to get a longer term setup, we'll probably go longer term. Right now, they're mostly shorter term. Under these trade alerts, I get the entry is labeled as setup. Exits are same thing. It's the same label on the setup for exits. So it's the same exact post. So you'll get the same alert on the exits. Do you assign a specific percent of funds for? Again, that's a personal choice. If you want to have a longer term account that's in stocks and other investments as a longer term, account, and you have this more of a shorter term, it's a personal choice, really. It's just, seeing major stock players. I have not really been watching the individual stocks. What else, the exits? Okay, so let me just pull that up. Okay, so the exits are here. So the exits are posted. What I'll do is the exits are more of guidance like this. So I'll say, we're at 100%, and the exits are really kind of left a little bit more open. So I'm not going to say get out right now. They're more like, hey, we're at 100%, and in this particular case, I was covering for this day, and I was busy. I wasn't able to really kind of get exact exits for the room. But I'm going to remind you, hey, when we're at 100%, hey guys, this is, we're at 100%. We're at support, resistance, good spot to take some profits. And then I'll update as we go through. I'll provide more guidance, and just depending on how busy I am on the day. But I'll always provide, some guidance. Again, this was an exit alert, kind of, hey, we're at 140%, middle of the target zone, not bad for a day. Keep in mind we're start of the day, so good return so far on this. And again, we were moving up nicely, so 140% can never go wrong taking profits there. And by the end of the day, there was a lot of people who held on some flyers. I'm just again posted a reminder, hey, we're at the ideal target. So as we go into the end of the day, so again, just posting kind of exit reminders more than anything else. But I'll always, I'll always remind people as we get to those levels. What is the time frame for the overall strategy? Time frames varies, whatever time frame has the best setup. How well setups work on VIX, and VXI? Very well. So I've been trading these for 10 plus years, about 10 years now, and I have noticed the Elliott wave follows the VXX and UVXY follow Elliott wave patterns very, very well. Just have to know the time frames to watch and the kind of unique characteristics of those products, but it follows Elliott wave very well. Do you confirm the expiration date when you give the setup? So on the workup, there's usually a highlighted column here. This is an automated highlight, and basically what it is it's the trade that is at 100% of the minimum target is really the one that gets highlighted. So that's the ideal option strike, because again, we want to get 100% at the minimum target. So that's typically the trade that I'll take. Some people like to be a little more conservative and go a little further out, but usually I'll be taking that highlighted option. That's usually the one I take. I will note in the room sometimes what I'm doing. This particular case, I noted exactly what I was doing there. But usually there's a highlight. If not, I'll note it kind of in the room. How often can we mirror the entry negative points? Yeah, I mean, there's sometimes some slippage, but it's I don't think people have too much trouble getting in. I always take my trades after I post. I have to, so I post the trade and then I enter the trade. So sometimes, a lot of times I get a worse entry than the members do because I may be fast and I'll take a few cents off of what the workup says, and the market comes back a little bit, people get a better entry. So the slippage hasn't been too big of an issue as far as that goes. I mean, if we miss by a few cents here or there, it's not typically a huge deal. But yeah, it hasn't been too big of an issue from what markets. I usually give enough time, and the market doesn't usually move that quick to where people aren't able to get in. And again, a lot of times there's another entry. So the question is, why is today not a high probability setup? Okay, so there's, I think it's fairly probably topped. Okay, but we don't have there's no target. There's nothing to target here. I have no target. So we may have topped the wave three, but what's the target? And when is that target going to happen? What's the time frame and what's the target? I don't have either of those two pieces of information. I have no idea what the target is because we don't have an initial move down. I have no idea what the time frame could be because we don't have an initial move down. So we have 0 and 0. There's no high probability setup. So although I think it's fairly probable we've topped, well, maybe I'll say it's 60, 75% chance we've topped. Okay, but I don't have a setup. I don't have any target and I don't have any time. So there's no way to do that until we get a move down and a corrected move up. Then we have a setup. That's A, B, and then C. At the 100% extension, we'll see what the numbers look like on the option setup. If that works out, maybe we take the trade. If it doesn't, then we don't, and we just wait. Again, the goal for the service really is 4 trades a month. That I'd be happy with that. If we can hit 4 trades a month, that's great. That's really all I'm looking for. Some months are going to be less, some months are going to be more. There's been some times when we've had 4 trades in a week, but it's rare. And there'll be sometimes we have 2 trades in a month. It just depends on what the market's doing. But I'm happy with 4 trades a month on average, and they usually happen. So it's much better to be patient, not take a loss, on a questionable setup just to trade for the purposes of trading. So. And that's what the service is, So for anybody interested in the service, you got to be patient, and that's it. That's what you can expect. There's going to be some times when we're just sitting on our hands and waiting. All right. On SPO options, is it pay to buy an expiration extra day or two? No, not typically, because your returns are going to be a lot lower. So, you've got to get the timing and the strike right. It's a delicate balance, but going out too far, it often you won't get that minimum 100%. Are trades typically during market hours? Yes. Option trades, so options only trade to 4:15, so always going to be during market hours. I think we had one trade last week, which was right at the close. So some people are getting in after the market close, and some people wait until the morning and got in. Can use on other products, CL, NG. You can use on anything that has an ETF. Pretty much, right? That's what I'm trading is ETFs. Anything that has options, but I'm using ETFs. Answer that question. Is there a free trial? Yes, 15-day free trial. I would recommend stick around for a month though. So again, just because the volume of trades is not, they're not daily trades. It's going to be, again, maybe 1 a week, maybe 2 a week sometimes, but on average 4 a month is what I'm shooting for. So take the 15-day trial and then, give it a month, see how it goes for you. It's $100, and that's your risk, $100. See if you like it. But I think 15 days is a little bit too short to really get a good idea of how well the service works for you. Pleasure to meet you as well, Keith. in Vegas. I'll be in LA in July if anybody wants to meet me there also. Experience our puts or calls better with your process. Both. So here's the trades: long market, long market, long market, short market, long market, short market, short market, short market, short market, long market, long market, short market, long market. So pretty evenly dispersed between calls and puts. So yeah, either one works. Just depends on the setup. Video will be recorded and posted. Can you play with the futures? Yeah, you can play with the futures. You'd have to convert the numbers though, because I don't provide the setups on the futures. Yes, replay will be available. Trade table like Victor. I did that in the past. The problem is that I don't have the bandwidth to really put, and it's not necessarily about an assistant. I don't have the bandwidth to be on top of the exits because I'm doing so many other things. So again, what I want to do is I want to teach everyone, how to do the exits. It's not that hard. Hit the minimum target, and we're at, 100% plus, take a profit, unless there's an ED setup, and I will always note that. That's it. So it's not hard to exit. You just have to do it. So, and folks can track their own, and I'll post these results every now and then, but I mean, it's just, I just don't have the bandwidth to run those tables like that. So, can we enter trades after we join the service, or do we have to wait until the next opportunity? There's no open trades right now, so we're waiting for the next opportunity. I think the silver trade is, aside from the silver trade, which I think is lower recently, so sure, you can enter that trade right now. The silver SLV, it's an SLV trade. And it's this one here. So long silver, looking for move up to around 28 to 30-ish by September. That's the setup. That's what we're looking at. So I think it's lower. So yeah, that trade's still open. But other than that, there's nothing open. That's a bonus trade. So do limit orders for exits work well? What about setting stop losses? I don't ever set stops on options because they, especially with these shorter term options, you want to exit as they're going up. You really don't want to be setting stops and trying to get out when they're going down. So you want to exit as they're going up, and that's why again the minimum target is so important. If we hit that minimum target, you're up 150%. Again, unless you have that pending diagonal setup in place, gonna more often than not be better to take your profits at that 100 to 150% versus trying to squeeze every last dime out of it and doing the stops. So I always like to exit. It's always better to exit options on these shorter term options on the way up as their premium is increasing versus stopping out on them. So I don't ever set stops on these, but I do set limit prices on them. At say that 150% or whatever the target I want is, I'll set a limit because it's always better to get out when they're going up. All right, so that looks like it for the questions. So we'll go ahead and end things there. Thank you everyone for joining us, those who are in the service, those who are not, and hopefully that answered some questions. If there's any other questions, please feel free to ask in the room during the week. For those who are interested in giving the service a try again, there is a 15-day free trial. I would recommend giving it a little more time than that though. So give it the 15 days, and when that 15 days is up, spend $100. Give it 45 days. By the end of 45 days, you'll know if it's going to be good, right for you or not. The end of 15 days may not be enough time, but at the end of 45 days, certainly I think you'll know one way or the other if you like the service enough to keep it. All right, thanks, folks. This will be posted in both the VIX service room and the main room as a recording. If anybody has any other questions, feel free to ask in the room. Thanks, everyone. Have a great rest of your week.